Bitcoin faces a critical crossroads as traders closely monitor technical signals and macroeconomic trends. Despite hovering around the $102,000 support level, recent on-chain data suggests mounting risks for further downside, with a potential slide below $100,000 if selling pressure intensifies. The Bitcoin Sharp signal, a key risk-adjusted return indicator on Binance, recently slipped into negative territory at -0.277, reflecting waning investor confidence and increasing volatility. Historically, such declines have often preceded significant corrections, especially if institutional demand remains subdued. Meanwhile, the market's overall sentiment is divided. Large Bitcoin holders, or whales, are actively cashing out, with reports indicating over $45 billion worth of Bitcoin sold by big players in the past month. This sale activity has contributed to a thinning liquidity pool, with on-chain analytics revealing increased long-term holder profits being realized, but with demand failing to absorb the increased supply. Notably, ETF outflows have reached $558 million, the third largest in history, signaling cautious investor behavior amid macroeconomic headwinds like rising interest rates and geopolitical tensions. However, some indicators hint at a possible recovery. The Bitcoin price experienced a brief rebound above $103,000, supported by technical levels and on-chain divergent signals. Analyst models based on the 90-day market versus realized price suggest Bitcoin may have approached an extreme cooldown, a historically bullish sign of a potential bottom. If the market can regain strength, there's scope for a short-term bounce back, especially if demand from institutional players picks up again. Bitcoin's dominance in the crypto market is also at risk of weakening, with some analysts predicting an impending altcoin season as money flows into altcoins like XRP, Cardano, and Solana. Institutional interest remains robust, exemplified by JP Morgan's recent $102 million investment in Ethereum infrastructure, and BlackRock continues to emphasize Bitcoin's long-term value despite short-term stagnation. In conclusion, while recent data paints a cautious picture with increased selling and deteriorating risk metrics, the overall market outlook remains mixed. A potential rebound may occur if demand from whales and institutions rebounds, but persistent macro uncertainties and profit-taking could prolong sideways movement or trigger a deeper correction. Investors are advised to watch key support levels and on-chain signals closely as the market navigates this volatile phase. Ultimately, broader macroeconomic trends and liquidity flows will be decisive in shaping Bitcoin's next move into the end of the year.